Money gotten by destroying lives will eventually bring you misery and destruction in the end.
Let me be clear. The government's recent actions have demonstrated our resolute commitment to take the necessary steps to ensure that depositors' savings and the banking system remain safe. Our current estimate is that Treasury will likely exhaust its extraordinary measures by October 18th. At that point, we expect Treasury would be left with very limited resources that would be depleted quickly. America would default for the first time in history. The full faith and credit of the United States would be impaired, and our country would likely face a financial crisis and economic recession as a result.
The weekly crypto update. Steak and Shake launches Bitcoin Treasury, vows to donate 210 stacks per meal. This is the first American corporation to start this initiative. Expect more to come. The company said that for every Bitcoin meal sold, 210 Satoshis will be donated to OpenSats, a nonprofit organization supporting developers working on Bitcoin Core and other open source Bitcoin projects. The move positions Steak and Shake among a small but growing number of major U.S. retailers integrating Bitcoin directly into both their payment and philanthropy models. While the chain did not disclose how much of its sales come through Bitcoin payments since enabling them in May 2025, its financial results hint at growing traction. The company reported $69.3 million in revenues from Q2 2025, a 12% increase year over year. The credit was to Bitcoin users for helping drive the 10.7% quarter-over-quarter rise in same-store sales. This initiative also comes with a partnership with Fold, a Bitcoin rewards program. The platform, Bitcoin goes mainstream when it starts showing up in everyday lives, said Will Reeves, Fold's founder and CEO. So basically, they're launching this new initiative to get more retail involved. And this is how they're going to mainstream crypto as a whole. They're going to start with Bitcoin, which is the Trojan horse, but it serves as the foundational layer for all your altcoins, such as XLM, XRP, and a host of others. Bitcoin will be used as an incentive-based mechanism to get more retail involved in spending. Also, eventually, they will have to get rid of taxes on retail when you go to spend Bitcoin, because there's no point in getting double taxed by the retailer and by the U.S. government every time you spend money on Bitcoin. Advances digital money strategy is HKMA's EHKT pilot program in its phase 2. The Hong Kong Monetary Authority, HKMA, with analytical support from Deloitte, has released its EHKT pilot program phase 2 report. They're looking to how central bank digital currencies and other digital forms could reshape the city's financial ecosystem. If you paid attention to my BIS series, you will understand that the Bank of International Settings has a major sleight of hand in reshaping the global financial ecosystem. The report shows a pivotal transition from physical cash to digital money powered by distributed ledger technology, and outlines how Hong Kong is positioning itself as a global leader in digital finance, tokenization, and next-generation payments infrastructure. HKMA report the digital money landscape is involved in two main categories: public money and private money. Public money includes central bank digital currencies like the EHKD, while the private money tokenized deposits and regulated stablecoins. These innovations are building the foundation for tokenization in Hong Kong, enabling faster and programming transactions that connect traditional finance with the emerging Web3 ecosystem. Slowly, it will be a hybrid ecosystem. You have the traditional legacy financial system mixed in with the digital financial system. Then eventually the digital financial system will end up digesting the traditional financial system till it's all merged as one system. So they have to dog walk retail banks into the next digital phase. If they do it at one time, then the whole system will crash. The new CBDC with stablecoin mechanics. Indonesia's digital rupiah to be backed government bonds. Bank Indonesia is advancing its central bank digital currency project with a new model that integrates stablecoin mechanics, making the upcoming digital rupiah one of the world's first sovereign digital currencies backed by government bonds. At the Indonesia Digital Finance and Economy Festival and FinTech Summit 2025 in Jakarta represents a major step in the nation's financial digitalization under Project Gorada. This approach effectively combines the security of a central bank issued currency with the stability of an asset-backed digital token, creating what BI officials describe as a national stablecoin. The model ties the value of the digital rupiah directly to government bonds through tokenization, ensuring that each unit of digital currency is underpinned by a tangible, stable asset. Bank of Indonesia's framework aligns with its broader digital finance agenda, which focuses on expanding innovation and acceptance, strengthening industrial structures, and maintaining financial stability. The move also builds on the success of the Project Gorada proof of concept completed in December 2024, which tested distributed ledger technology platforms such as Quarter and Hyperledger Vesa for digital currency assurance, redemption, and fundraisers. On the bond-backed design, BI would tokenize government bonds to issue digital securities built atop the CBDC infrastructure. The system aims to enhance market liquidity by making bond settlement faster and more transparent while reducing transaction costs through blockchain-based automation. Also, the project's design emphasizes interoperability across digital platforms, ensuring that the digital rupiah can integrate seamlessly with existing payment systems and international standards such as ISO 20022. That is the key. Each country's stablecoin or CBDC-backed system has to be able to interoperate with this ISO 222 standard. This will be the new standard moving forward how emails are sent, financial payment transactions are sent across the world. You got to understand, on-chain will be the new model. On-chain is more secure. It's Amazon Web Services, Google Cloud, Microsoft Storage, any of these Web 2 security and storage-based platforms, they will have to upgrade their systems and eventually move to being everything on-chain. When I say on-chain, it means things will be more secure, tamper-proof, and unhackable. Through the current internet we have, you can easily hack and tap into corporations' confidential information. Firms said the collaboration is a step towards mainstream fund tokenization, improving the accessibility and transparency of traditional investment products. Just remember, accessibility and transparency will be the main topic of conversation in the next 3 to 4 years. BNP Paribas will serve as a transfer agent, integrating tokenization seamlessly into existing capital markets infrastructure. The initiative matches Singapore's growing role as a global hub for regulated tokenization, particularly in the funds and fixed income sectors, where financial institutions are actively piloting blockchain-based solutions to unlock liquidity and automate settlement. The project removes Marketnode's modular platform Gateway as the core tokenization architecture. According to the firm, Gateway allows interoperable insurance and management of digital assets across broad Ethereum virtual machines and non-Ethereum virtual machines networks, where recent integrations include crypto blockchains such as Solana, Stellar, and XRP Ledger. As tokenizations accelerate from concept to reality, the industry's infrastructure must evolve just as boldly by bridging infrastructural gaps and uniting expertise across our partners. We have to find what the next generation of trusted interoperable markets can look in Asia, said Andrew Scott, head of digital assets at Marketnode. Wall Street Solana Bet advances as Fidelity updates ETF filing. Fidelity advances its Solana ETF registration with full staking strategy, joining Bitwise and Grayscale in a market that drew over 81 million in first-day inflows. Fidelity Investments has filed a pre-effective amendment for its Solana ETF with the Securities and Exchange Commission, moving the registration towards automatic effectiveness. The filing reveals the fund will stake all its Solana holdings to generate returns exceeding the Fidelity Solana reference rate while charging a 0.25% annual fee, fully waived for the first 6 months after launch. This update pushes Fidelity into a rapidly expanding Solana ETF market. Coinbase dismisses concerns that stablecoins threaten U.S. bank deposits. Market notice shared Wednesday. Coinbase chief policy officer argued that stablecoins will destroy bank lending. Narrative ignores how the market actually functions. Most stablecoin demand comes from outside the U.S., expanding dollar dominance globally. Coinbase chief policy officer argued that the stablecoins will destroy bank lending. How the market actually functions. Most stablecoin demand comes from outside the U.S., expanding dollar dominance globally, not compete with your local bank. Shahrzad said, adding that concerns echo misplaced fears raised during earlier financial innovations such as money market funds. Basically, crypto will operate alongside the traditional financial rails as far as transactions and payments until they're was fully flushed out where they can take over the financial and payments rails. So they're going to use stable coins just to bring more liquidity in the system, more trust into the system before they full blown go into we're using crypto every day. But here's the thing, you won't know you're using crypto. The only thing that consumers are concerned about is if the transaction goes through. They're not worried about what software or what crypto or what financial instrument they're using. The only thing to worry about is the convenience of getting their payments made. According to Coinbase, the majority of stablecoins users are international investors seeking access to the U.S. dollar, not domestic savers. In countries facing currency depreciation and limited access to banking, dollar-pegged stablecoins serve as a lifeline for the underbanked, providing stability in the bridge of global commerce. You have to think, so with stablecoins, it's matching in value 1-to-1. Your money doesn't lose value, such as countries like Turkey, Venezuela, Argentina. The report noted that roughly 2/3 of all stablecoin transfer occur on decentralized finance and blockchain platform systems that operate independently from traditional banks. They are the transactional plumbing of a new financial layer that runs parallel to, but largely outside the domestic banking system, the firm said. As I said before, crypto isn't here to compete with the traditional financial sector. It's here to complement it and then eventually take over the payment retail financial sector. Shahrzad emphasizes treating stablecoins as a threat misreads the moment, arguing that they reinforce the dollar's international role rather than compete with it. The company said U.S. policymakers should see stablecoins as a strategic tool for dollar expansion, not as a risk to community banks or deposits. Community banks and stablecoin holders barely overlap, Shahrzad said. In fact, banks could improve their services in stablecoins. Even as global stablecoin circulation reached $5 trillion, Coinbase estimates the majority will see outside the U.S. with little effect on domestic deposits, which currently exceed $18 trillion. The firm argues that, if anything, stablecoins will extend U.S. monetary influence by giving American financial firms a competitive edge in the digital asset economy. The defense comes as more banks explore stablecoin products following the passage of the GENIUS Act, the U.S. regulatory framework governing stablecoin issues in payment systems.
Just to recap the information I just gave you, banks, institutional corporations are full speed ahead in adopting this technology. They already have done pilot programs and pilot projects to phase out the bugs in the system. They understand this system cannot operate without trust, security, and tokenization. All of this will not come overnight. It will be a gradual process, moving us from the old, antiquated, slow, friction system to a system that's fast, scalable, cheaper, transparent, and frictionless. So based on the information I said, what are some of the concerns that you have for this fully digital system? Are you concerned with privacy? Are you concerned with transparency? Or are you concerned with feeling like you're locked in a system that won't benefit you, or feeling like you will get your rights taken? I hear a lot of people talking about social credit scores and mark of the beast. So drop in the comment what you think about the new system. Also, how would you benefit from this new system? How would you help yourself and help others? Until next time, peace.